Do you know the only thing that gives me pleasure? It's to see my dividends coming in. So here's the thing about passive income. Everybody out there, including myself, has been lying to you. Kind of. And what I mean by that is there's only a few forms of truly passive income out there where you literally do absolutely nothing, yet continue to earn money day after day, week after week, month after month. And so previously, when we've talked about different passive income ideas on this channel, some of them still do involve your time in some way. And while this is technically not passive income, a lot of people do lump it into this category, including myself. But what I want to talk about today is my favorite form of truly passive income, where I literally do nothing to earn this money, and that is passive income earned from dividend stocks. Now, if you're not familiar, guys, dividends are regular payments from companies that you own shares of. For example, Coca-Cola pays a quarterly dividend to their shareholders as a means of sharing profits with investors. So earlier this year, I had this goal of building up a $100,000 dividend stock portfolio utilizing M1 Finance, and I've built it up now to just over $160,000. So I thought it would be cool to go through this portfolio and show you guys how much passive income these dividend stocks are earning. Now, as far as the brokerage goes, I picked M1 Finance for a couple of reasons. First of all, they have a portfolio level dividend reinvestment. So rather than taking these dividends and buying useless stuff with them, I actually reinvest them in order to earn compound interest, and M1 Finance allows you to do this automatically. Second of all, it's totally commission free, so you're not paying any commissions to your brokerage. Third of all, they offer fractional shares so you can remain fully invested. And finally, the auto rebalancing feature will basically look at your portfolio as a whole. You set your percentages, and as new money is added to that portfolio from your bank or from earned dividends, it puts money in whatever you are low in to rebalance your entire portfolio. So if you guys at the end of this video want to check out M1 Finance for yourself, I do have an affiliate link down below if you would like to support the channel, and I also have a completely free 30-minute video training that shows you step by step how to build a dividend stock portfolio utilizing M1 Finance. Last thing before we jump into my portfolio, guys, I just have to make a quick disclaimer here that I am not a financial advisor. This is not financial advice, and you should always do your own research and due diligence before investing in the stock market. That being said, guys, let's check out my dividend stock portfolio now. All right, guys, so here we are inside of my M1 Finance dividend stock portfolio, and quite a bit has changed since my last portfolio update. I did hit my goal of reaching $100,000 within this portfolio, and I wasn't sure if you guys wanted me to continue doing monthly updates of this portfolio since I'm not really adding any more money into it at this point in time. But if you guys do want to see monthly updates on this portfolio, just go ahead and drop a like on this video, and if I get a lot of people who are interested, I will continue doing monthly updates showing the progress of this portfolio. But I made a couple of huge changes to this portfolio, and I want to go ahead and share those with you now quickly, and then I'll get into how much passive income this portfolio currently earns through dividends. So first of all, if we go through the holdings here in this portfolio, there are a few new additions, and there is one stock in particular that is no longer in this portfolio. The first new addition here is Caterpillar, which I added a couple of weeks ago, and in a very short period of time, I'm actually up around 13% in this stock, which is pretty exciting. I also added shares of Verizon to this portfolio and Bank of America. So those three stocks are new additions to this dividend portfolio. That being said, I finally decided to cut my losses on General Electric, and I sold my small position in GE stock. Now, for those of you who are not familiar, I've been holding on to shares of General Electric since 2017, and I was down about 50% on this position. It wasn't a massive position, but I did take a loss of around $5,000. But to be honest with you guys, it was just a point in time where I felt that money was better used elsewhere. So I sold GE stock, and that money that it sold for was reinvested across my entire portfolio. Not to mention, I do have a lot of short-term capital gains this year from some short-term moves in the market. So taking a small capital loss during a year like that isn't the worst possible move that you can make. But I decided to cut my losses on that stock and get rid of it. Since this is a dividend portfolio, I wanted to make sure I was invested in good dividend paying stocks, and General Electric is just not one of those. And then one other change I made to this portfolio, if you guys recall from my last update, I actually borrowed $25,000 to invest in my M1 Finance portfolio. However, I ended up taking some gains out of my growth stock portfolio, and I had some cash sitting on the sidelines. So I said, you know what? Why don't I just pay back that M1 borrow and basically get rid of that? So I ended up paying back the $25,000 that I had borrowed to put into my dividend stock portfolio. But then I was thinking about things, and I realized that with M1 Borrow, I'm able to borrow at a 2% interest rate, and I currently do have a car loan on my Mercedes that I picked up a couple of months ago at 3.99%. So I realized I could actually borrow against my portfolio at roughly half the interest rate and put that towards my car loan and pay this back instead. So I did borrow $55,000 against my portfolio, but I put that towards my car loan to pay less money in interest. But all of the money within my portfolio here, this $162,000, none of this is borrowed money at this point in time. This is all my own money invested here. So in order to be suspenseful here, I'm going to go ahead and do this from smallest to largest. So starting off here, the company in this portfolio that makes the smallest amount in dividends is my shares of Apple. I have just under 79 shares, and they currently pay a dividend of 21 cents per share. So per year, that is $64.62 of dividend income. Next up, we have Microsoft, another big tech name here. I own about 44 shares. They pay a 56-cent dividend per piece, which is just under $100. It's $97.66 per year in dividend payments. After that, we have Lowe's, which is the top performer in my portfolio. I own 54.2 shares. They each pay a 60-cent dividend per quarter. So annually, that is $130.08 in dividend income from Lowe's stock. Next up, we have McDonald's, which is a newer addition to this portfolio I bought a couple of months ago. This is 33.7 shares. They each pay a dividend of $1.29. So annually, that is $173.89 in dividends from McDonald's. Next up, we have Dunkin' Brands, which is another top performer in this portfolio. And shortly here, we'll take a look at the overall holdings and my return from this portfolio. But Dunkin' Brands, I own just under 139 shares. They each pay a 40-cent quarterly dividend. So annually, that is $223.15 in dividends. So pretty much every time I go to Dunkin' Donuts and get my coffee, which is maybe once or twice a week, I am basically able to pay for that with my dividends from Dunkin' Donuts stock. Next up, we have Intel. This is one of the dogs in my portfolio currently. This is 177 shares, give or take. They each pay a 33-cent dividend. So annually, that is about $234 in dividends. Next up, we have Caterpillar stock, a new addition to this portfolio. I have 59.6 shares. They each pay a dividend of $1.03. So annually, that is $245.55 in dividend income. Next up, we have Bank of America stock, another new addition here. I own 372 shares. Each earns a quarterly dividend of 18 cents. So per year, that is $267.84 in dividend income. Then we have Emerson Electric. I own 135.4 shares. They each pay a 50-cent dividend, so that is $270.80 per year in dividend income from Emerson Electric. Then we have Merck & Co. I own about 113 shares. Each share earns 61 cents per quarter, so that is just under $276 annually in dividends from this stock. Then we have a classic Warren Buffett investment here, Coca-Cola. I have 185.2 shares. They each earn a 41-cent dividend per quarter, which is over $300. It's $303.73 per year in dividend income. Then we have 3M, which has been another lackluster performer in this portfolio. I own about 56 shares. They each pay $1.47 in dividends, so that is $331.04 annually in dividend income. Next up, we have GPC, which is Genuine Parts Company, the parent company of Napa. I have just about 106 shares. They pay 79 cents per share quarterly, so that is $334.64 annually in dividends. Next, we have National Grid here. I have 173.9 shares. This is actually my former employer, one of my favorite investments for dividends because it is a boring utility investment. They pay dividends twice per year, $1.06 per share. So in total, that is $368.67 in dividends. Then we have Verizon, which is kind of a boring investment, but the reason why I bought it is because of the high dividend yield associated with telecom stocks. So I have 154 shares. Each earns a quarterly dividend of 63 cents. So that is $388.08 per year in dividends from Verizon. Second to last here, we have Walgreens Boots Alliance. I have 250.3 shares. They each earn a quarterly dividend of 46 cents. So that is $458.05 per year in dividend income from Walgreens. And then lastly, the highest earning stock here in my portfolio is IBM. I have 75.1 shares that each earn $1.63 quarterly. So per year, it's almost $500. It's $489.65 per year in dividend income from IBM. So in total, guys, as far as the passive income from this portfolio from dividends goes, annually, it is $4,657.46, which comes out to $388.12 per month, or about $12.76 per day. Now, if you look at my portfolio as a whole, it has a dividend yield of about 3%. It's around 2.94% if we round up there. And I could be technically investing and earning a dividend yield of 4 or even 5% on my portfolio here. But the reason why I invest and have a slightly lower dividend yield is because I'm not only focused on the dividends, I'm also focused on the growth aspect of this portfolio. Because there's a lot of stocks out there that pay a high dividend yield, but there's really no growth potential with them, meaning you're basically only making money from that dividend and not from an increase in the share price. With this portfolio, I would ideally like to have a blend of income from dividends and growth from the underlying shares. So for example, a couple of stocks I own in this portfolio have a pretty low dividend yield. For example, Apple stock has a current yield of just 0.7%, Microsoft is sitting at a 1% yield, and Lowe's is a 1.4%. However, all three of those companies have a substantial amount of growth potential, which is why we've seen a drastic increase in the share price. So on that note, let's jump over to the holdings tab here and look at the overall performance of this portfolio. So in total, across my entire portfolio here, I'm up around 11.75%, which is just over $17,000 in capital gains. So my total cost basis here is around $145,000, and the portfolio is worth around $162,000. As far as the actual stocks go, you can see my biggest winners here. I'm not going to go through all of them, but by far, Lowe's has been my best investment. I've almost doubled my money on that position. Dunkin' Brands as well, I'm up about 35%. And Apple, one of these companies with a lot of growth potential, I'm up about 30%. And then you can see these other ones here are up a fair amount as well, anywhere from 10 to 20%. And then let's talk about the losers in this portfolio. My worst performer so far is Walgreens Boots Alliance. I'm down 12%. I'm also down in IBM. I'm down just a little bit in Verizon and a little bit in Intel as well. But the rest of the stocks I've done pretty well in, except for, General Electric, which I decided to finally sell and just get out of this portfolio and just, get on with my life beyond owning General Electric stock. So anyways, guys, there you have it. That's going to wrap up this video. Like I said, if you want to see me do monthly updates of this portfolio, just go ahead and drop a like on this video. If enough people are interested, I will be sure to do that. The only reason why I'm hesitant to do that is because I don't plan on adding any more money to this portfolio in the foreseeable future. I'm just going to simply take my dividends and reinvest them. But if you're still curious about the performance over time, I would be happy to do those updates if enough people are interested. Like I said, if you want to go ahead and check out M1 Finance and support the channel, there's an affiliate link down below, and there's also that completely free 30-minute M1 Finance training that'll help you get up and running step by step. I'll show you exactly how to do it. If you haven't subscribed already, make sure you subscribe, hit that bell for notifications, and I hope to see you guys in the next video.